What's up, YouTube? Welcome back to another video. In this video, we're going to be talking about price action. We're going to be showing, a bullish price action and how mitigations work and the importance of the time sessions. All right, so I just want to cover CAD for a second and just talk about this clean bullish market cycle, talking about the sessions and just overall talking about the mitigations that happened inside of this bullish market cycle. Okay, so it's going to be pretty cool to look at, just to give you guys an idea, and hopefully you guys will learn something from this, right? The ideas behind these videos and these YouTube videos is to help you guys learn something that's going to help you improve your trading, improve your overall journey, and your success with trading, right? I believe everyone is a visual learner, so that's how I like to do my teaching. So getting straight into it, right? We're going to go right into it. Let's look at CAD JPY for a second, and this is the market that I want to cover. I'm in replay mode right now, and I just want to cover. You're gonna just see how a bullish price action is supposed to look and what the market tends to do in a bullish price action. And just going back a little bit more to the point where this bullish price action started, and let me just delete this right here. You can see at the focal point of this bullish price action where we kind of changed characters right here, where we made that initial shift and where we changed characters right at this moment. What has the price action been doing? What have we been doing with the time session? So you guys can see I have this Asian session range here, and I'm gonna pull it up. It looks just like this. There's no special times, there's no special settings to this. It's just Asian session, right? It's just this tells me when Asian session is active, when London session is active, and when New York session. So the gray area is Asian session, and then you'll have this little green area right here that's Frankfurt going into New York open, and then you have the blue is going to be New York. All right, this is very important to me. Right, this little indicator is very important to me. I don't use this indicator to technically trade, but I use this indicator to kind of like give me an idea of what Asian session did, what London session did, and what New York has done, right? So as we have spoken to before, I believe I've made a video covering a topic like this, and it's called time and price. Time and price is very important. You have to understand the time that you're trading and what tends to happen during that time. As you can see, Asian session, as I always say, will create the quote unquote liquidity, right? Asian session will create that quote unquote liquidity because London session, as soon as Frankfurt and London session begin to open, you'll have that manipulation come in, and it'll usually cause that manipulation. Now, depending on where that manipulation happens, sometimes you can kind of predict that manipulation depending on if you understand what the price action is giving you and you understand where the market is going. So for example, if we're in a bullish market, right? If the market wants to go higher, what do we need to do? We need to entice sellers. Okay, so if the market wants to go higher, we need to entice the downside. So what does that mean? That means if the market wants to go higher and Asian session is going to be our liquidity, what do we expect the manipulation to go towards? The downside. So we expect the market to raid downsides. You can see what has been happening on this. We've been raiding the downside. Right, we've been seeing that manipulation go towards the downside and the market continue up. Manipulation down, right? We have manipulation down, market goes higher. Manipulation down, market goes higher. Manipulation down, market goes higher. So what do you think is going to happen here again? Manipulation down, market goes higher. Okay, that is the term of that is how you spot a properly formed bullish price action. All right, so getting right into it, right, let's go ahead and cover some of this mitigations right here. And this is where it got kind of clean for me, right? We were seeing the manipulations of Asian session right here. London session creates that manipulation, and then you'll have New York session just continue to move where we're going to go. So here we go. What can we see right here? We see that, like I said before, Asian session manipulation. Right, and then underneath Asian session manipulation, we have an accumulation. Okay, this is a type 2 accumulation. So we have exited the trading range right here. When we left here, we made a up thrust action and we left the trading range, creating a sign of strength. Right, that's all we need to actually trade a type 2. So it kind of give you something here. Here's your STMB well, the main manipulation of that type 2. So if you're going to take an entry from here, your entry would be, 50 and the 80, as we always say in our mentorship. You have a 50% entry here, and you're looking at a stop loss at about a 9 pip stop loss, and then your 80% entry is going to be your better entry, which is going to give you around a 3.5, including spread. That's going to probably be like a 4.5. 4.5 on CAD. So as we can see right here, the market came down, we rated Asian lows, and we created an accumulation, and we go higher, breaking this high. All right, cool. So what do we expect for the next day? What is our point of interest? What are we gonna, what do we want to see here? Well, of course, we're gonna want to see a mitigation of this right here, since this is where buyers came in and we accumulated for us to go higher. This is where we're gonna expect the market to come back into. So go ahead and draw this out as my point of interest. And I'm going to go ahead and make it blue. And like I said before, what are we going to expect the market to do? We're going to expect the market to raid Asian lows, hopefully coming down here to mitigate this price action. That's the only thing that makes sense, right? So what do we see happen? Pretty clear as day. We have a huge manipulation, right? This was news. And look where that manipulation got us into. The point of interest where that accumulation has happened, right? So this is telling us that this is where buyers was the most recent at, right? So this is the only place that makes sense for the market to come into to mitigate, because this is where the accumulation happened that caused this move higher. So when I tell you guys that time and price is important and understanding these areas is important, this is what I'm talking about. So that is the point of this video. I want to show you guys this price action and trying to give you guys more clarity on time and price and how it actually works. So let's keep following this little trend here as it continues. What happened on lower time frame? I want to see, is this the move? I believe this is it. This is not a very, I'd say, clean accumulation. Now this is a type 4. So honestly, type 4 accumulation, we have something like this. That is what represents that. We have that kind of counter trend, and we have a fractal accumulation in here, right? So we have a very, very small accumulation, if you guys can see it. I don't want to keep going down lower time frame. I don't know how far it'll let me go, but this is an accumulation right here. We have our drives. We have 1, we have 2, and we have 3. This is our secondary test, ST and B. This is our spring. This is a fractal accumulation, right? If you go on lower time frame, probably the 1 minute, the seconds time frame, you will see a very clean accumulation right here. And that gives us more confidence in this market, because we know that we are trading within a point of interest, and we have been doing the same thing for the past couple of days, manipulating the lows, manipulating the lows, manipulating lows. So what do we expect once the market manipulates the lows and trades inside of a point of interest? Here, we expect the market to come higher. So this is an easy day trade. All right. Did we mitigate here? Right, we did not mitigate this candle, which is where my entry would have been. Let's see. Do we have another entry here? Okay, so we have an entry, and the entry would have to be off of this entire drive towards the downside, right? So this is a very large stop loss. Yeah, this is a very large stop loss. Not something that I would have gotten into. But let's see if we actually get some more price action that's going to give us a better entry here. All right, so fast forwarding a little bit, we did not get us I'd say a better entry. Your best entry would have to be off of this reaccumulation sitting here. You could have took the 50%. Since we did not come and mitigate, like we did not come farther to mitigate the actual candle here, we kind of just mitigated this whole move. So what we could play off of is this right here with reduced risk. I wouldn't have risked a lot of money on this trade. It would have been a reduced risk trade for me. And that would have been your best entry, looking at it from that perspective. And let's see what happened. And of course, as you know, we're going to continue higher, right? So I'm just going to let the market go ahead and go higher. Fast forward a little bit more. And we'll talk about the next mitigation, right? So I'm going to go ahead and delete this. All right, so market goes higher, we make a new high. Okay, we make a new high. So now we have this low leading us to this high. All right, cool. Now, what do we have here? We see Asian session is sitting right here, and we have not manipulated it yet. So if the market is going higher and we have completed our objective, right? We came up here, we made this new high. What do we expect is going to happen? Where do we need mitigation? If the market is going to come back to anything, where is it going to come to? Well, what do we see here? We still have this accumulation that I was talking about that has not been mitigated, right? That candle that I was talking about that has not been mitigated. Okay, so what gives me confluence to expect the market to come back to this candle or to this fractal accumulation? Well, many things. We have made a new high, right? And then, like I said, the structure and the trend of what has been going on in the market as we've been rating Asian lows every time, right? We've been rating Asian lows every time. So what are we missing here? We're missing the rate of Asian lows. So if we want to continue this bullish market cycle and continue this bullish price action, and we've been seeing a repeated occurrence, what do we expect the market to do? We expect the market to somehow make its way to come down here. And that gives us a reason to expect the market to at least tap into here. If we're going to come this low, we're at least going to tap into here. And what are we going to expect? We're going to expect some type of, fractal accumulation or some type of entry within that area itself, right? So let's see what the market does. As you can see, there you go. So, there's two ways you could have played this. You could have had an entry sitting right here at this candle like we were talking about before, right? And you're looking at a 6.3, so about a 7-8 pip stop loss, or going down to a lower time frame. What do we see here on a fractal market? We see an accumulation again. Now, like I'm saying before, if we go down to the seconds time frame, we go down to the 1 minute or the seconds time frames, we will see this as a very clean accumulation, and there is an entry here, right? But I don't want to kind of mess up the video and have it mess up the whole, replay mode on TradingView. So here's the fractal accumulation that we're looking for. Just eyeballing this, here's your entry right here, right? That's your entry. Because if this is going to be your last manipulation down of this fractal accumulation, this is the open of it. All right, that's going to be the open of this manipulation, and you can see the market has came. We have went up and we tapped into it right here. So that is an entry right there, and possibly this wick could have been another entry somewhere inside of here as well. But just eyeballing it, that's going to be something for the lower time frame. And there goes your entry. And what does the market do? Go ahead and speed it up a little bit more. And there you go, right? So I wanted to use this video to show you guys an example, and here it is again, right? There it is again. Market raised Asian lows, and we do what? Continue higher. So I wanted to give you guys an example of, just bullish market cycle, just bullish price action, and what to actually look for when you're looking for, what to actually look for when you're looking at a bullish market. This could be vice versa in a bearish market. You would expect the same thing, just the opposite. You would expect the Asian highs to be rated. So when we say time and price is important, this is what I mean by time and price. You can see how, correlated these sessions are with each other. These sessions are very correlated with each other. These sessions really mean something. Okay, so when I have these, when I have this on my chart, when I have this Asian session range indicator on my chart, it really means a lot, right? I look at this really deeply. So just to kind of backtrack and go full scale with everything, the main points that you want to take from this video is time and price is important. You have to know when you're trading, and you have to understand what the sessions have done. Like we said before, we usually use Asian session as our liquidity, right? We want to see a manipulation of the highs or the lows depending on the trend, right? So in this case, we have a bullish trend. We want to see the Asian lows get manipulated, and mostly that happens during New York session, right? New York session will most of the time give us that manipulation, and London session, completely messed that up. London session will most likely give us that manipulation of the lows or the highs depending on the trend. Okay, so in this case, like I said before, we're expecting a bullish trend here. If we're expecting a bullish trend, we want to see the lows get manipulated. After that, once the lows get manipulated from whatever the manipulation was, we want to have the mitigation of that manipulation, right? So we want to find the mitigation and where we can get in from that manipulation, because we expect the market to go higher. Okay, so obvious trend right here: lows, lows here, lows here, lows here, lows here, lows here. Right? This has happened a couple days straight. This happened for a whole week straight. This is prime time, easy bullish trend. All right. So when we say the trend is your friend, this is what we mean. When you align that with time and price, it is easy to understand where the market's going and how to catch these setups. All right. So I just wanted to have this video for you guys to give you guys an idea of, time and price. We cover this much deeper in the mentorship, and we understand this a lot of the times in the mentorship and why these manipulations are happening. So if you guys want to join that, link is in the description. But I wanted to give you guys this video to give you an idea of how to view the market, just another perspective. All right, so if you guys have any questions, if you have any ideas, or you have any recommendations of videos that you would like to see or topics that you would like for me to talk about, please let me know in the comments, and I will see you guys in the next video. Peace out.